Who thinks adaptation is a good theme for venture investment?
This is Wicked Problems. I'm Richard Delavan.
This is a massive opportunity, right? It's not just a risk we're talking about. It's a really, really important, big opportunity.
So what happened last summer was they had fire ignitions by sparks, and suddenly they had like 100 to 200 ignitions a day. So they had far more fires than ever before. It was just too much. And so they had completely rely on satellite data to get an overview on the situation and actually decide where to fight fires first.
Who thinks that taking climate risk data into existing commercial models, into insurance, into infrastructure, will solve the majority of the climate adaptation problem?
On the software side, we have users, right? In this case, it's infrastructure investors. It's funds, it's banks, it's big companies that invest in infrastructure. They're not really used to the problem, really, to be honest. So the problem is just starting to hit. This understanding that our physical world changes rapidly right now.
We can do this, and it has a role. But the question is, how do you make money? Are there venture returns?
Adaptation is the climate tech theme that dare not speak its name. Until now. No one wants to be first, on the record anyway, to admit that the Paris Agreement optimal goal of keeping warming under 1.5 degrees C is now out of reach. But it's been an open secret in climate circles for a while. April has been the 11th consecutive month of record temperatures globally. Analysts like Zeke Hausfather reckoned we're likely to see 2024 be the first calendar year we break that average increase. Much, much sooner than expected. So if climate disruption isn't some far future thing, what do we do about it? There's been a taboo on talking openly about adaptation. Some people argue that to do so is a form of doomerism, and that it might siphon off resources that should be going to mitigation measures like fulfilling the COP28 pledge of trebling renewables by 2030. But some people have concluded it's too late not to talk about adaptation and resilience. And given how fast the data is moving, increasing the likelihood of extreme events that we need to prepare for, basically, we have to both keep going on mitigation and stop kidding ourselves that adaptation is a someday break glass in case of emergency thing. The glass is broken. Last episode, we spoke to Rupert Reed and Liam Kavanagh about their project to activate a political majority for climate action, and adaptation plays a key role in their thinking. And way back in November, we spoke to someone who's been thinking about this from an investment perspective for some time.
Climate tech investing has a huge blind spot, and that is climate adaptation. And I want to bring climate adaptation to the awareness of those investors, to acknowledge that first, we don't stop climate change tomorrow, so we have to deal with the consequences. And there are plenty of companies out there with business models that are already working, and they are investable.
That was Ulrich Seitz. And in just a few months, Ulrich went from talking about it to putting together one of the first conferences dedicated to climate adaptation investments. Adapt Your World 24 took place in April at the beautiful Nymphenburg Palace in Munich, where more than 70 founders and funders came together to discuss the topic. In the intro, you heard clips from some of the panel discussions, including from Ben Murphy from Kiko Ventures and Tobias Engelmeyer from climate risk data startup Vida. In this episode, we'll share interviews from the fringe of the Adapt Your World 24 conference with Richard Youngman, CEO of the Cleantech Group, which has been in this space for more than 20 years. And in this episode, we'll also bring you our chat with Thomas Grubler, from a leader in one of the most promising areas of adaptation startups, fire tech, helping track the wildfires that will increasingly threaten homes, businesses, and electricity infrastructure. As climate tech pioneer Julio Friedman put it to Shail Khan on the Catalyst podcast this week.
So like everything else in climate, it ends up boiling down to really who pays. Is it taxpayers? Is it ratepayers? Is it shareholders? How much of everybody pays what fraction of stuff? And in the same thing, like when do you do it? Where do you do it? It's not do you do it. The math tells us we have to do it.
Friedman was actually talking about CO2 removals and utilization, but I think the quote actually works pretty well to describe the dilemmas about adaptation. By now, we've all become pretty good at thinking about what those maths are when it comes to technologies like solar, wind, battery storage. But when it comes to adaptation, it feels like the math is slightly different. So I went into this conference with a simple question. What's the IRR, the internal rate of return, the profitability of something like a seawall? How do you actually make a profit from that? Should you? If you do, what does that look like? So we're grateful to Ulrich for having us as a guest at this conference in Munich. We hope to bring you more chats with many more of the people and companies who spoke at it. And we hope you might take a moment to rate and review this show on Apple Podcasts or Spotify to help others find those conversations. And if you prefer an ad-free experience and maybe even want to help us cover more in climate tech, including adaptation, why not sign up to our feed at wickedproblems.earth and consider becoming a member. For now, we'll kick off our Adapt Your World interviews with Richard Youngman, CEO of the Cleantech Group. We hope you enjoy. Thank you for joining us on Wicked Problems here at the amazing Adapt Your World conference at the Nymphenburg Palace here in Munich. We're talking about adaptation. We were just talking a little bit before about how there have been so many waves and the sector keeps changing. Do you feel like this is the beginning of a big shift in terms of talking about adaptation more and more?
I don't know whether it's the beginning of a big shift, but there are shifts, right? We've always treated this as a theme that is across sectors, right? And so it's always going to change. It's going to change because of time periods. It's going to change because of the industry. It's going to change because of the receptiveness of solutions. It's going to change because the duration in which certain technological solutions will take. So some are relevant really for the 2040, 50 period, whereas the last speaker was talking about how solar emerged from the 2000s to scaling today. So I think that's inevitable. We've obviously had the vantage point for 20-something years, and clearly, originally the thesis was all mitigation because, as I sort of said in my remarks, I consider mitigation the ultimate adaptation solution. The issue is, to your time period point, we've reached a point where we're clearly behind the curve, we're behind the 8 ball, we're not on track for Paris. Realists know that. They know we're going to go above 1.5. We, doing our best to try to be 2. We'll see where we are, right? But in that world, we must start looking at adaptation and resilience because things are changing to a point where you can't make assumptions, if you like, about stability based on what the 2000s and the 2010s were like. We've got to think about what the 2020s and 2030s are going to be like.
Both on the transition side and on the side of the phenomenon we're likely to experience. People have talked about it being stochastic as opposed to it being this straight line. We get a lot of noise. And I guess the question that I have is when we have people starting to talk up adaptation as a wave, one of the panels today, the question came up, but is this really investable? Is this really not a non-profit event? Quite a question I asked in the break earlier was, what is the IRR of a seawall? Because it's not really something we're used to thinking of in those terms. And we could talk about avoided losses for the insurance industry, but in terms of the capital stack and who's going to fund some of these companies, is that a challenge that you're coming across as you're talking to, surveying the whole sector?
Well, there's certainly questions people are asking, and the most dismissive of people are like, this has got nothing to do with us. This isn't a venture capital play. This isn't a technology company play. They think of it more philanthropy and governmental. And of course, some of it is, for sure, but I think that's missing the full picture here. I think the reality is that if you're developing new forms of hardware for anything today, and you're perhaps at a relatively early stage, maybe your sort of deployment timing is late 2020s, 2030s, etc., you better be thinking about what the world will be like then and how your stuff, whatever it is resilient to that. It doesn't necessarily, that's why I think, it's a new wave, but it's a wave of the same wave. I really feel it a mistake for people to think of adaptation and mitigation as separate. We're all trying to solve the same problem. One's just more realistic about what's actually happening today, and one's more focused of how do we get from where we are now to sort of 2050-ish, and have made, let's be frank, serious progress on emissions as opposed to talk.
Right, indeed. And I think you mentioned we're not on track for the Paris goals. Potsdam released its data last week with 38 billion in losses. Trillion, excuse me. Thank you. Being locked in terms of GDP. There we go. We're still not used to it, but we will have to be. Do you think that these are the sorts of things that are going to become tipping points in the expectations of even investors to having these conversations? As you say, many were dismissive, but if people are talking about that level of loss, those levels of things that need to be avoided, is there not a kind of intuitive recognition that the financing of that, there's going to be some way to make a return? It might not be the kind of normal venture returns that you're promising LPs, but the capital stack we're just still figuring this out. But people are going to have to make profit, and otherwise nothing's going to happen. Right.
Look, I don't pretend to know the answers or anyone else, but it would be disappointing if investors can't see the issues at hand here and what the threat, there is no way that investors are going to like a world of a lot of unexpected losses of whatever sort, right? There's no way investors like a world of instability, because that makes investment extremely hard. Investors are not going to enjoy a world where insurance premiums are either unaffordable or so high that they kill their IRR. So I just think there are a lot of interlinking issues that say it's not just a conversation we have. I mean, I think someone put it quite well earlier, which is in a way this isn't anything new. It's just probably new in the sense of perhaps the intensity and urgency with which it might happen. Again, I would encourage people listening to this to take a belief of let's be a little bit humble and accept that if you go back to the origins of climate science and what people anticipated and predicted might happen going back 50 years, I think it's probably fair to say they've been fairly accurate. They're not being precise, and they still can't be precise about the future. But I think, therefore, we should take it as pretty serious that the kind of impact and the kind of a climate sort of unleashed, if you will. We've already unleashed, obviously, a certain amount, but we should not give up hope. We can still get on top of it. So I don't know how that plays out, but money speaks to money, right? And you would have thought money, people like to make money, but they also hate losing money. And we're in a world where both dynamics could exist. So, there's been a lot of discussion here today, isn't there, about both the risk side, but also the opportunity side.
And on the opportunity side, one of the things that was great to see, and you can talk offline about how much of your slides I can use in sharing with my listeners, but in terms of how you've broken down different, you said 1,400 subsectors in terms of looking at adaptation, which is like mind-boggling.
Not adaptation.
Oh, so that's just across your entire...
the whole clean technology set.
Got it. And of that 1,400 subsectors of the whole clean tech technology set, in terms of breaking down the adaptation-related sectors, you obviously are tracking this as close as anybody in terms of looking at what things are going to pop. So if I'm a VC listening to this, or if I'm sitting in a family office listening to this wondering, well, adaptation is just too big of a thing, but there's going to be things that I kind of understand, like software, or doing risk analysis that it's helped by AI, or satellite tracking of fires or something, whereas there might be other things that aren't just going to be as obvious about where I'm going to be able to get a return. In terms of your analysis, what would you say are the top 3 things that people haven't looked at yet that you expect to get traction over the next couple of years? I haven't looked at as much, I should say. Haven't got as much attention as perhaps fire tech, for example.
Yeah, well, that's a good question. I mean, I don't know if this answers the question well, but we're still somewhat bemused that the world of water it's sort of like the poor cousin in the clean technology theme, meaning in terms of the amount of investment that flows towards solutions to sort of improve water availability, water scarcity, resource reuse, etc. That feels to me like a crisis that's going to hit all of us far quicker than I think most people think and talk about.
Right.
Now, one of the problems there and why it's sort of underinvested in is perhaps because it's seen as a somewhat conservative industry. The track record of people making big returns doesn't exist at scale. There are some examples, but that feels like one to watch in terms of a change because it's so wrapped up in the decarbonisation and the adaptation issue. We are going to run out of water. Simple.
Right.
And therefore, every aspect of what we talk about, from energy to food to infrastructure to, relies on, it basically assumes there'll always be water. And so, I think I feel that will change. The industry of so-called creating water, I think is going to develop. I have no idea at what pace, and I have no idea whether the solutions can reach a price point that is okay. And why I say that is because water's problem is in why it's not hugely invested in, if you like, is its price point variability by place, probably by socioeconomic conditioning, etc., etc.
Right. And I spent a lot of time in the Gulf, as listeners will know, and so, very sensitized to the issue. And indeed, I think people in New Orleans might have become more sensitized to it if the Army Corps of Engineers hadn't, in fact, successfully prevented the inflow of salt water overwhelming some of the water filtration plants for the city. That would have been a bad day. People talking about buying home desal kits that they'd stick on their tap, like a Brita filter. Other things other than, water, so water, big one, right? Needs more attention. Other things that you think people should be looking more at, perhaps?
Well, I think, the food question isn't going away, and there's got a long way to go. So the last talk was saying, is there a chance that regen agriculture, rewilding, is the solar of the 2000s today, meaning it's got 2030 path. I don't know how to take that, but what I will take it as is we have definitely a huge progress to make on that front. So, I think it's an area that has got invested in over the last sort of 5-6 years quite heavily, in sort of, driven really by perhaps alternative protein areas, by indoor farming areas. So I think there is a consciousness building up of food insecurity, but I'm not sure it's gone prime time. I think the classic subjects are still sort of the high emitting industries, how do we decarbonize electricity, energy, et cetera, transport. But I think we all know there's a 100% problem we've got to solve, not a 60% problem.
No, and indeed, I think I saw Undo on one of your slides.
What's that?
I think I saw amongst the companies doing things like soil additives.
Okay.
Undo, so enhanced rock weathering as part of a carbon removals play, but also increasing the nutrient base in the soil. So we've had a few other people on the show the listeners will be familiar with who work in that space, and people like Anthony Yusufarian, who works for the first 30 VC, doing soil tech basically itself. So we geek out on all sorts of stuff here. It's crazy.
Great. Well, look, soil is like one of those subjects, right? Not enough people think about how important it is, and
one of the only points on your graphs that had a leftward motion in terms of things that moved in the other direction the last couple of years was, of course, indoor farming, which you just mentioned. Vertical farming, I suppose, being a lot of that, I guess. I don't know enough about how it's broken down, but it feels to me like that's an area, along with, indeed, some aspects of cultivated meat, where you've seen some both investor backlash, some value destruction, as well as people just perhaps wanting to believe things could be true before the data was really there, in terms of whether there'd be demand or whether or not you'd be able to get cultured protein produced at a kind of economical scale and reasonable price. Do you think that the sector's taken an unfair drubbing? Have they been overcorrected? What's your view?
Yeah, I do. They're a go-to subject when people say, is there a clean tech bubble going on? Is there a climate tech bubble? It's like, there'll never be a clean tech bubble. There never was a clean tech bubble. It was a solar and biofuels bubble. There'll never be a clean tech or climate tech bubble because you're talking a thematic that's covering so much. But there will be places, and you've just named a couple that I believe, got over invested in at overvaluations too fast for what was there. But it didn't mean the propositions were wrong entirely, I mean, at all. I just think timing and how you get there and who gets there. So, you know, there are people in the, take the word indoor farming away and just say controlled environmental agriculture, or, you know, the Dutch have shown that you can do that very well for a very long time. So we can do this, and it has a role. The question is, how do you make money? Are there venture returns in there? I mean, that might be a different question. You know, I believe that there are people in both sides of that, so in the alternative protein side and the controlled environmental agriculture, where people are supplying tools to the bigger companies, so a B2B play who are doing pretty well. I think it's the big, glamorous, we're going to build a vertical end-to-end solution. I think those are the ones that have suffered the most.
Yeah, I think it feels like if you have a good visual, you're going to wind up getting, or something that resonates with a sense kind of thing, like the idea you can make the meat smell like meat as opposed to, you know, something made from plant protein. You know, you're just going to get more interest, it feels to me. One of the people we interviewed for the show was someone from BAR Technologies, Ben Ainslie Racing, who've gotten a just staggering amount of media for the work they've done with Cargill, and some others are putting these, you know, basically wings that are taken from technology from wind turbines that can, you know, take away 1/3 of the maritime fuel use for smaller ships, you know, transporting grain from China to Brazil and whatever. So, but it's the visual that keeps getting them on CNN and on BBC. So the idea you can show people a fantastic, futuristic, something that might be a NEOM in Saudi Arabia indoor farm, you know, looks fantastic, looks great, be in Wired magazine. But, you know, that sometimes I guess has the temptation that you start to get a lot more interest, which leads perhaps to some valuation problems if your model isn't quite there yet.
Yeah, I mean, maybe that's part of it. I mean, people can relate to, you know, the burger, if you will, on the sort of B2C alternative protein side. They can relate to a greenhouse. They can relate to the fact that food has an issue. They can relate to the fact that does it really make sense shipping food around the world? But yeah, I suppose these are the things we've got to break down and work out. I mean, you're mentioning Cargill. I mean, I think it's a good thing to have, you know, the bigger corporates who know these industries and, you know, are skilled, frankly, at bringing new variations to market, should we say, and adapting in that sense. They know about mass global industries. Startups do not. However, startups do have what big companies will never have, which is innovative spirit and speed. And so if we could get that interconnection correct, we would be able to move much faster towards solutions that truly can scale and therefore produce these valuations that the backers would really want.
Yeah. I mean, and in the renewable space in particular, energy storage, et cetera, you've seen a lot of activity from corporate VC. Again, you've got one of the best views in the world in terms of looking at how things have been changing. We're talking today about adaptation. Do you see, you talked about Cargill, for example, or others in the B2B, where they see an opportunity to pick up a technology or something that might help them get ahead of adaptation? Do you think that corporate VCs will start to play more active of a role, or are you already seeing that for adaptation startups?
To some extent in adaptation startups, but I think honestly, when the adaptation theme within the theme is still too small to really draw big conclusions quickly.
Right.
I still think most of the companies are relatively early stage. Corporates don't tend to play there unless it's sort of mission critical, if you will. You know, in our data set, you know, corporate VC has been give or take in 1 in 3 rounds backing kind of clean tech companies around the world relatively consistently for some time. Probably moved up from 1 in 4 a few years ago. But I think maybe to go back to a different theme, which is less about technology and more about innovation more broadly, is this is actually one of the, so whilst I think there's a win-win potential in big company and little company, there are it's one of the areas among many where we need to find different models of how to make this work.
Right.
You know, I think the pharma industry finally figured it out, but it took a long time. You know, frankly, these big companies need to grow a little humility too,
Right.
and realize that they're part of the problem in terms of they can stifle innovation as much as they can be accelerants of it. I mean, I could go on, we could do a whole podcast on that, but it's a really important mechanism.
Well, hopefully we can get you on at some future date for a future episode. I think we'll leave it there. I'll let you get to drink yourself. Thank you so much for joining us, Richard.
Not at all.
And we'll hopefully talk to you again soon.
All right, pleasure.
We're going to take a quick ad break and come right back. So stay tuned.
Hey, here are some ads to help pay the bills. If you'd prefer a version without ads, subscribe to our member feed at wickedproblems.earth. A monthly subscription is cheaper than buying us a pint.
Welcome back to Wicked Problems, Climate Tech Conversations. Our thanks to Richard Youngman for talking with us. I think it helped better define what we're talking about when we mean investable. Some particular applications are just going to be simpler to understand where a return can come from. Generally because a particular industry winds up needing it to avoid losses, and therefore there's a market of ready potential buyers, or because a substitution tech, like LED lights, just winds up being such a game changer on energy efficiency that governments nudge through the change. But what about fire tech, which, perhaps because Silicon Valley regularly now is confronted by California's fire season and choked with smoke walking across a futuristic campus in Mountain View or Menlo Park, has had a raft of interest. Zoom out and you can see why it's a priority. Insurers see mounting losses from wildfires, and in some places like California, have just left the market altogether. The economic consequences are staggering. Wildfires cost 2 to 4% of the American GDP every year, which is kind of insane. If they were a country, they would be the fourth largest emitter of greenhouse gases. So we spoke to Thomas Grubler, a co-founder of Munich-based Aurora Tech, which uses satellite data to identify fires far more quickly than older alert methods. And Cleantech Group's research shows why people would pay. If response times to fires were improved by just 15 minutes, it would shave between 3 and 7% off of those costs. If that doesn't sound like a lot, remember that 7% is off a number headed into the trillions. Here's my chat with Thomas Gruber. So, who are you and why are you here at the conference?
Hi, Richard. Yeah, I'm Thomas. I'm founder and chief strategy officer of Orotech. We provide firm intelligence for a sustainable world. I would love to tell you more about this. That's also why I'm here at the conference.
And it's fire tech, is that right?
It's fire tech, exactly.
So, and a very exciting area at the moment. Lots of interest from everybody, from people who own power grids to, and you told a great story during the conference today about if I understood correctly, a client in Quebec who normally have to deal with trying to fight, 30 fires concurrently, and they're dealing with 300 in recent summer. Is that right?
Exactly.
And how do you help them?
That's right. So what happened last summer was they had fire ignitions by sparks, and suddenly they had like 100 to 200 ignitions a day. So they had far more fires than ever before. And because the forest is quite dry and so, you actually need to fight the fires. If you have many fires, they normally get an overview of the situation by planes. But with this amount of fires, this didn't work anymore because it was just too much. And so they had completely rely on satellite data, and it shows our data because it was the first data they could really rely on to get an overview on the situation and actually decide where to do evacuations and where to fight fires first.
All right. And so is it the public sector that you work with mostly, or give me an idea about the kind of customers that you work with?
It's a mixture, but of course a large part is public sector. So governmental and firefighting services, and we also have the private sector as customers. So private sector are two groups: commercial forestry and utilities. Right. Commercial forestry in South America is a very typical client. They have their own private fire brigade, and they are working to protect their assets, because if they have less trees, they make less revenue. So they actually need to implement the best technologies out there on the planet to protect their assets. And then we have utilities. Utilities actually need to pay penalties if they shut down a power line without needing to shut it down, and they pay penalties if they cause a wildfire because they didn't shut down the power line. So in both cases, they use our data to understand better how to react on existing fires, on high fire risk, etc. And also, when there's a fire occurring, to repair the systems faster because they know what happened.
I'm just thinking about what you just said, that you're using satellite data to be able to monitor at a very granular level. I can't even, your business, would it even have been possible even 10 years ago, 5 years ago? But how did you, are they your satellites or you're renting time? How does this work?
Yeah, that's a very good question. I think 10 years ago it was really hard. We started 5.5 years ago, so that was the idea. And we were probably the first company out there actually inventing a miniaturized thermal infrared camera. So a thermal camera that can measure temperatures and, to be more precise, also the perimeter of the fire from space.
Right.
The satellites are the size of a shoebox, so we miniaturize the camera a lot. Most of the satellite is actually something we procure. So all the components and so on, you can buy everything on the market. You can even get the satellite as a service on the market. So you don't need to build the satellite itself and operate it, but you only ship the payload, the camera, and then you receive the data afterwards. So that's what we do. Then we receive the data from the camera, we apply our algorithms on it, we use AI to actually predict the fire growth, to make it easier to understand which fire is the most important one to look at, and then ship it to the customer. We're like internet-based platform web app.
And I mean, for good or for ill, I imagine you're getting a lot of growth at the moment. Would that be fair?
Yeah, that's fair. So the last fire season, was too much for most of the customers. And as we see here in the conference, it's really something we need to think about now, because we can't do what we already did the years before. We can't just buy 10 planes more or 10 fire trucks more. That's not enough, because suddenly we have 10 times, 50 times more fires. So we can't scale what we have, but we actually need to find new ways to cope with the problems.
Well, Thomas, thank you so much for joining us. Enjoy the rest of the conference.
Thanks a lot, Richard.
That was Thomas Grubler from Aurora Tech. Before we go, we thought we'd bring you a couple of samples from other conversations we sat in on in Munich. First, here's Robert Sunderland, the CEO of an 18-month-old climate risk data platform, Red Lines Analytics, based here in the UK. And I think he put his finger on a significant challenge. The finance function and sustainability function in big corporates supposedly care about different things until you quantify that the cost of not changing could be higher than changing. In my experience, that does tend to get a CFO's attention.
One of the things that we found out was that actually there's a really big market for this. There's growing legislation and requirements and needs in the kind of the reporting and the risk understanding. But the other big problem we saw that there was a big disconnect between the finance teams at the business and the sustainability teams that are being tasked to implement these things like TCFD and things like that. So we decided to try and position Red Lines in that kind of intersection so that we could do something about it. We feel that turning climate-related risks into financial costs is what's going to drive the biggest change in corporates. By turning it into pounds or euros, you can actually drive more meaningful change because more people in the business care about what you're trying to do. So how do we do that? Just to give you a flavour, we look at a whole spectrum of risks and opportunities. I think one of the things we get a lot is that there's a huge amount of uncertainty around climate change, and we totally agree with that. But if you kind of come up one level, there's actually you can say with high degree of confidence that one thing is for sure is that we're going to change. Either we're going to not make any progress on greenhouse gases, and the weather patterns are severely going to change. And we've got things like floods and wildfires and extreme heat, drought and extreme weather patterns. These things are going to cost businesses a lot of money. Looking at it systematically across all of the risks and opportunities, you're going to find things that you didn't know were opportunities for your business, and this could be a massive benefit. I've spoken about complying with regulations. This is a really evolving scene, and I think the one thing you can say with certain there is that it's only going in one direction. There's only going to be more regulations around this. And if you have a well-managed business and you can demonstrate that you have no risk, then that always comes with a reduced cost of capital.
Robert Sunderland of Redlines. The IPCC estimates that we could have a summertime ice-free Arctic sometime in the 2030s. But what if we could start rebuilding the Arctic ice pack? It features in a good few sci-fi novels like Ministry for the Future, but a Dutch startup called Arctic Reflections is raising funds to prove out a method for doing that for real, based on existing technology, to build ice roads. CEO Fonger Ipma.
Our ambition is to halt the net summer sea ice loss from year to year, which is about 100,000 square kilometers. So that's twice the size of the Netherlands, which we already knew how to pump water out. But it's only 1% of the Arctic sea ice in winter. So we can be quite strategic of where we actually thicken the ice. And we aim to distribute the ice by using the natural ice flow across the Arctic. We've actually already substantially de-risked our initiative. I've worked for 3 years with the University of Delft, doing lab experiments and modeling in my spare time next to my full-time job back then. By now, since a year, we fully incorporated the company. We're doing field tests, like in Svalbard, where we really prove and validate the potential impact that this has on the climate. We're using existing technology. This technology is just being used for decades already to create ice roads in Canada to supply remote villages. We're also talking to a lot of stakeholders, both locally with indigenous communities who really have a lot of knowledge about the ice. And also we're recently got a UN endorsement of their Ocean Decade program, which I think is a great recognition. So what is our impact? Actually, about half a meter of ice will create 1 extra month of ice in the summer, which means heating avoided on a square kilometer of ice of about 1 kiloton when you compare it on a 20-year life cycle. So the ice is cooling, CO2 is also cooling, but on a different time scale, obviously.
So instead of reforestation, re-icing, and ice credits instead of carbon credits. I suspect we'll be hearing more about that. Finally, let's finish where we started. That quote from the great Julio Friedman. Who's going to pay for all this? The bank holiday Financial Times calls it the $9 trillion question. In the first instance, when it comes to adaptation, as Richard Youngman of Cleantech Group told us, corporations that can leverage these techs to avoid losses to their asset base are not only logical buyers, but potentially highly strategic investors. But what role will traditional VC play here? Turns out there's a lot of innovation happening, attracting different kinds of money to these funds. Jill Landau from 2150 VC led a very interesting panel discussion on the role of VC with a relationship with corporates and how that's going to potentially drive climate adaptation investing. Some samples of the conversation follow, featuring Helga Debel of Emerald Technology Ventures and Tim Jungblut of Eurazeo. Interestingly, corporations make up a lot of the investor base for Emerald Technology Ventures, and Tim Jungblut has a story, if you listen carefully, about an adaptation tech exit, an acquisition, that if you're carrying around an iPhone, is probably already in your pocket.
How does the VC world look at adaptation overall? And of course, for you guys at Emerald specifically, how does it fit into your investment thesis, especially given that you have a lot of corporations amongst your LPs?
Yeah, so we already noticed that during the break that we have a natural bias because we have been looking at the space for 25 years. And while I hear Richard talking about that there was a focus on primarily mitigation topics, I think adaptation was always around, at least what we do at Emerald. But it could be that many others So yes, it is a topic that we're aware of. Other venture capitalists I can't really cite or quote, but the corporates, we have more than 50 multinational corporates around us as investors. There definitely is a topic as well, and I can elaborate on that later in terms of water risk exposure and what they're trying to do.
Because of, I would say, probably 3 criteria are being met. There's a shift in the way that we think about or do things. So your paradigm shift ultimately, so cost reduction or I guess regulatory pressure. We have massive market opportunities and of course highly motivated customers because the world has realized that there is a need. So I'm speaking and I'm definitely seeing, and I think we've all seen this in the mitigation space. Tim, I'd be curious to hear from you if you want to share the mic thing. How do you see adaptation tech fitting into or ticking all these boxes? And also how does it really fit into the Eurozero ultimately investment thesis, especially next to PE and debt, which I think is also something you guys are doing?
Yeah, absolutely. Thanks, Jill. Well, to be honest, I mean, adaptation, not like in your case, is for us kind of a newer topic, because also venture capital, I have to admit, mitigation measures in terms of climate tech are at the forefront of our investments, and there are several examples you could mention, like we invested in 1.5 degrees, ice cold grad. That is clearly mitigation oriented, or earlier on, like nearly 10 years ago, in a company called Sunfire. It's about electrolyzers to green hydrogen. Nevertheless, there was the one or other example where we invested also early on, like 5-6 years ago, in a company called Breezy Meter. That is about air quality. And whoever has an iPhone, at least knows, we have your weather app. Scroll down, air quality powered by Breezy Meter. So that's cool. And we talk about access later on. That's my understanding. And maybe to frame it a little bit further, you made an hint in that direction, Jill. Eurozero is one of the bigger players out there. I mean, only quote-unquote in venture capital, we have 3.2 billion euros under management. But we also, serve clients in growth capital, private equity, private debt, and infrastructure finance. And all over the group has like 35 billion euros under management. And in infrastructure finance, you can imagine we have no team dedicated to that. There's a lot more going on in terms of all the stuff we have talked about this afternoon already, which is more like for their, ideas how a project would function and bring financial returns longer term. And we are, and it's very common sense when it comes to venture capital, of course, look for startup companies with really high growth potential, big markets, international, because that is one of our ideas to really naturalize regional, national user ready and make them grow faster with our network. Also bringing our industrial, investors into the game and make it happen that way. So that makes it not that easy.
Thank you. So we do have a number of investments where we either have our corporate LPs, who are investors in our fund, participate in those rounds, or others that just come in because they're interested in the concepts that the companies are developing. So that part of the equation, I would say, of the value chain of participation of corporates is working well. The part where we need help, and I use every opportunity when I speak publicly to throw that challenge out to all the corporates, is we need corporates to start buying products that startups make and eventually buying those startups. And the first point is actually very easy to do. All big companies need to do is write an order. Say how much, for how much, and what is the spend. And then the startup either delivers and gets paid, everybody's happy, or doesn't deliver, and nothing happens. So that's an opportunity to accelerate the success of these startups, but at the same time, reach the goals that big companies have to have their sustainability targets met by 25 or 2030, or whatever the case might be.
Well, that wraps up our coverage from Munich of the Adapt Your World 24 conference itself. But if you want to learn more about climate adaptation, stick with us, because it'll be a theme we'll be going back to a lot this year, exploring the frontiers and perils of the space as we all try to adapt to a world where wildfires, floods, increasing sea level rise are not going away. And Wicked Problems will be bringing you guests from across all those sub-themes where AI, satellites, biotech, and other innovations are being brought to bear to help blunt the worst effects of the climate change that we can no longer avoid. Some of it we wouldn't have the chance to meet without Ulrich Seidt's insanely fast organizing feat of putting that conference together. So thanks, Ulrich. And thanks also to our guests, Richard Youngman, CEO of Cleantech Group, and Thomas Grubler, co-founder of Orotech. We'll be back soon.
Thanks for listening to Wicked Problems, made possible through the generosity of people like you. If you liked this conversation, please share it and leave us a rating and review on Apple Podcasts or Spotify. It really helps people find the show. If you'd like an ad-free version of this podcast, consider becoming a paid subscriber at wickedproblems.earth. You'll also get our newsletter, all our show notes, member-only goodies, and you'll be supporting media that wants to tell the stories at the frontier of climate tech, the place where people and politics, technology and capital meet and shape the future. And whether it's one you'd want to live in. Wicked Problems is written and edited by Richard Delavan. Production assistance was provided by me, Theodore Delavan. Wicked Problems, Climate Tech Conversations, is a production of Wicked Problems Limited. Thanks again for listening.